what I'm seeing in the news is a lot of people predict that people are going to be declaring bankruptcy. A lot of people are going to be, seeking consumer proposals. Um, is that sort of the nail in the coffin, um, as far as getting a mortgage in the future? I know the traditional standard was, as you learned from your parents, you'll never get a mortgage. You'll never do this if you do that. Is that true? What's the stigma around that? And if it is possible, sort of how does somebody get a mortgage after a proposal or bankruptcy? Going for, I kind of toss the ball back to you. Sort of
Yeah.
what's that kind of look like on your end?
Well, and I think and I'm glad you brought it up because we see lots of people, and lots of people, it can be embarrassing for people. It can be vulnerable, right? And I think especially when you got Uncle Jim or mom and dad saying, you can never claim bankruptcy, you can never do a proposal. Reality is it happens, right? And it's important that people know that it's not the end of the world. It really isn't. What I actually see as being the end of the world is when I see someone trying to take every last penny and just make their minimum payments, knowing that it's just not going to happen, right?
Yeah.
And that's where a bankruptcy or proposal really is the answer, because number one, in bankruptcy, typically you're in bankruptcy for a little less than 12 months, right? Once your bankruptcy is called discharge, right? We call it like bankruptcy jail, where a trustee is looking at your financial information with a magnifying glass for about a year if it's your first one, give or take. Once you're out of that, you get what's called discharge. Now, the bankruptcy stays on your credit report for 7 years, okay? However, once you are discharged, you want to start rebuilding your credit, okay? Now, we have lenders that from the day you are discharged will lend you money. However, their requirements are you must have a down payment. So if you're looking to go bankrupt and you want to buy a house, after immediately following discharge, you would need 20% as a down payment, okay? So it's obviously sounds kind of counterintuitive. You go from having nothing to 20% at the end. But what I will say is if you have mom, dad, sister, brother, co-investor, friends that are going to work together, that is an option, okay? Or what we do see sometimes is people are able to keep their homes in a bankruptcy. You don't always lose your house in a bankruptcy. So I think it's really important, and this would be another phone call, but really important to have a trusted source to talk to, because filing for bankruptcy is different from a proposal. And we have some great partners and referrals on another, if anybody's looking, we can help out with that. But when it comes down to proposal, which is very interesting, proposal is much more common when we see than a bankruptcy. That means that you're paying out a portion of your debts and you're not wiping out all the debts. You might try and pay back 10 cents on the dollar, 50 cents on the dollar, something that's pre-negotiated. We have a lot of companies that will actually, and one of our specialties is we'll actually help people who have a mortgage when they file a proposal, help them pay out the proposal with money from their mortgage. Okay.
Wow.
And the reason why it's not the end of the road, and just looking at it from a lender's perspective, a lot of time, when Uncle Jim, sorry, we're picking on Uncle Jim today. I hope he's not for real. Sorry, Uncle Jim. But when we end up paying, when you file a consumer proposal or a bankruptcy, banks, they don't like it. Okay. They might have a minimum of a 2-year requirement to get back into a bank, but other lenders see it differently. They do like it because you know what they say? They say, you know what? Brian filed a proposal or bankruptcy. You know what I know? He's not getting any new credit for a long time. So I know he's not going to go and rack up more debt because he just filed one. So on another end of the spectrum, that from a lender's perspective is managing their risk then, right? So
That's an interesting perspective. It kind of really is. I never really thought of it or had it sort of laid out that way. So let's say I'm somebody, for whatever reason, I'm looking at doing a proposal. What are sort of the steps that I should be considering if my goal is to have a house in 2 years after the proposal's been settled up or discharged, as you said?
Gotcha. So that's an excellent question. So what you want to do is immediately, once the proposal's paid or the bankruptcy is discharged, get a credit card. Sounds funny, right? But it's like, get a credit card, because lenders want to see, history is history, but what have you done lately? So we typically recommend a Canadian Tire card, like one of those Home Depot cards, something that is like, it's going to be a high interest card. Okay. However, if you pay off the card within 30 days, you're not paying any interest, right? So for those of you that don't know that even if you have a high interest rate card, you can build up your credit rating very good, but you don't have to pay 20 or 25% interest. Just don't keep a balance on it, right? So the first thing you want to do is get 2 trade lines. A trade line is a credit card, a car loan, something that shows up on the credit report. That is the best thing you can do. And if you have trouble getting one through another lender, you can end up getting a secured card. So we end up having companies like Home Trust, for example. You give them $1,000, they'll give you $1,000 credit card. So if you've had a lot of issues, trouble getting credit, that's a great way to get it reestablished too. That's the number one thing that lenders are going to want to see post a discharge or proposal.